This strategy has made me 86.8% gain in a single year. Even in the market that most traders fail, I was able to get a return every month without a single losing month. And today, I'm sharing with you the exact strategy, live trades I took recently, and the data that backed the trade. There is always key to success in everything. In the market, most people don't fail because they lack strategy. They fail because of the lack of the patience. And solution to that is data. Before we move into the backtesting and data, let me show you the live trades I took recently. When market open, this gap that happens over the weekend, then this gap led to a break of this structure. When this break of structure happened, I knew that now this is a valid POI that I want to trade from. And when we zoom in, we can also see that the market is reacting from this supply, which led to this low. Now, when the market came back to this supply, it respected that supply. The respect has led to this internal break of structure, meaning the supply here is valid. So I was waiting for the market to retrace to that supply for me to take the trade. It eventually reached that supply, but it was so late to me because the confirmation happened at around 18:00 Eastern time. And according to that time, that is so late for me. New York session is already almost to a close. So because according to my rules, which I've even shared with you in my previous videos, that my trading start at around 5:30 a.m. Eastern time and ends at around 18, which is 6 p.m. Eastern time in Africa. So when market came back to this point, it was already late, and actually it worked the way I analyzed the trade came to work. So over the night, I'm waiting for the next day, 5:30 a.m. Eastern time, which was around this point. When market came to this supply, it was respecting this supply, but at that time it was at night. I was not in the market. Then the Asian session consolidate as usual at around 6. We got a confirmation here. It was a bearish continuation confirmation. This one was a push, led to this low. Then there's a small retracement, led to this low, which has taken out the previous low. According to me, that one I should enter the market. It is a bearish continuation confirmation. I entered the market and trade and up playing so nice. It was on a Wednesday, I can remember that. Then on a Thursday, also we got a trade. This is another setup that I'm working on, but I can just give you a brief on it. I'm working on it. I still don't have enough data backed it as the another setup. When the market take up this Asian high after taking this Asian low, then a market came retrace and take this Asian low. There's a high probability that this low will not be taken out. So I usually test it, take a trade at after the confirmation. As you can see here, there's this sell, buyers, then sellers, then I enter. It worked well. I'm testing it. It is working well, but there's still no enough data. I can't lie to you. Actually, the trade I closed early. I didn't take my usual 3R because it is a setup that I'm still working on. I took a 2.5R, which was good also, but 3R is always the best. I do encourage you to work for 3R. The same setup I shared in my community, I shared with my Telegram channel. By the way, as I was going through the comment section, I've seen people asking so many Can you teach someone how to trade? Among other comments that I saw there, meaning they were looking for the way of access to me, and I've come up with a solution. I've created a Telegram channel. Just go and join. It is completely free. I'm not charging anything. I'm sharing my trades, my ideas, everything in there, each and every single trade that I take. And this, I've done it for you. Let's continue with our analysis. The result of my first week. My first week, I took two trades. One was on a Wednesday, another one was on a Thursday. Both of them led to a win, which was good. Now we are going to the second week, because on Fridays I don't trade. I didn't trade on a Friday, so we are going to the next week, which is on a Monday. On a Monday, I was seeing this one here as a break of structure. Seeing this as a break of structure, looking for the valid zone for me to buy. At a valid zone, I told we mark two zones. One is a decisional zone and other is a extreme zone. Any zone in between is a trap. Don't trade at any zone. So we identified the zones. If you want me to make a video showing how to this is the mark the POIs, how to qualify the POI, how do you know that the POI is going to be respected, and how do you know that the POI is still valid or has already been invalidated? Let me know in the comment section, because remember, this channel is to help each and every single person to become a profitable that shows how the market. At this point, I was waiting for the market to come to this point, because according to my rules of POI, this one was a valid POI. It has led to a break of structure. It is an extreme of this push, and so I was waiting for the market to retrace to this point. After retracing to this point, I was waiting for confirmation to appear for me to take the trade. And now it played the way I planned. It came back, it retraces back to that point to show you the way you are supposed to take an Asian law, which was good. Then give a confirmation. Let's go. And started to play well, but pull back and take me out at a stop loss before my break even level. That was that. It was part of the data, because I know I don't have 100% win rate. There's no strategy has 100% win rate. Even according to my data that I want to share with you, I have a 65 to 78% win rate. So that 100% win rate, it can work. There are months that has happened, there are weeks which that has happened, but in a single quarter, I've never seen that. That is a lie. No, 100% win rate. It was on a Tuesday. Market continued to make a lower low. When it made this low, I was now aware that the market was not a bullish, but it was now a bearish. Now my main aim was to sell. I've already changed my mind. It is now not a buy, but now a sell. At this point, you can see there was an imbalance here. Then I mark the supply, because after the break of structure, because this was a break of structure, and the zone which led to a break of structure was this one here. When this zone was taken out, I was now aware that the point of interest that remained is this one only. Now I was waiting for it to hit that zone. It hit that zone, but it was already late. I was now not active in the market. I was waiting for the next day. When the next day, which was on Thursday, when market opened, the Asian session played. I got a confirmation for a trade. Here was a confirmation. This was a high, led to this low, led to this high. When this low was taken out, this was now a BOS confirmation, break of structure confirmation, led to break this low. When this low was broken, I now know that we are about to go down. I entered the trade at this point. My stop loss was above this zone, and I was targeting 3R. My break even was At this point, as you know, my rule of break even after it has taken the previous lower low in a bearish market and previous higher high in a bullish market. So when it take out this high, I was supposed to break even, but I didn't break even because I didn't place an alert. So I was not aware that the price has already hit my break even. It was my fault, and it came back, take me out as at a stop loss. This trade also I shared with my community. Each and every trade I take, I do share with my community. Give them the idea, the reason why I take the trade. I'm not just giving a trade. I give an idea, the reason behind the trade. Why am I entering the trade? The exact stop loss level, the entry level, and take profit level. I share all everything with the transparency. When the market retraces back and take me at a stop loss, I was looking for a re-entry because the trade was still valid. I got another confirmation, but the market did not come back to tap my entry. It just went and hit my take profit level without tapping me in. And that is how that day went. It was supposed to be a break-even day, but it ended up being a loss. Here is what I want you to know. Some months, some weeks, there will be losses. In my data that I want to share with you, there was no a losing month. All months are profitable, but this is not guaranteed. Some months there will be losses, some months good. That is the same thing that happens here. You have realized that the first week there was no loss, all was a profit, but in now the second week I was supposed to get one loss and one break even, but they all end up being a loss because one was my fault. I was supposed to break even, but I didn't break even. The trade management was not good on my side. What I want to tell you that the profit is not guaranteed. This is what is meant by a profitable trading. Let me now show you one important thing, something that change each and every trader, something that each and every trader need to have for you to be successful, and that is data. Here is the data I wanted to share with you. You can see that in a whole full month, I've taken like 6 trades. In these 6 trades, meaning if you are averaging every trade with a day, it shows that I'm taking like maybe most of the day I'll take 1 trade in a week, and some week is going to give me 2 trades. What this shows you that you should not trade daily. It is not a must you have a trade daily. Most of the profitable traders don't trade daily. They wait for the right trade. They don't take every trade. They wait for the setup to align. That is what this data means here. By having 6 trades, but you can see that the return was 4.8. 4.8 in a 100k account, which is affordable by a pro firm. That is a very good return. That was a month of January. If we go to a month of February, it is another month that I've taken 10 trades now. It was now not 6. I've now taken 10 trades, and you can see that in those 10 trades, 2 of them were losses. There was some break even. There were 2 losses. There were 1, 2, 3 break even, and not even 3, 1, 2, 3, 4 break even, 2 losses, meaning how many trades won? 1, 2, 3, 4. Out of I've only won 3 trades, and 2 losses, 4 break even. But I'm still profitable because of my risk to return. When I risk 1%, I need a return of 3%. That also will make you a profitable trader. Check on that. The same happened now in the month of March. There was a 10%. In the month of April, that was 8.7%. In the month of I want to show you the month, like this month of May. I did good. I was taking the trades, but something keep on happening. Most of them were losses. One, two, three, four, five. Five losses. One, two, three, four break even, and only two profits. Two profits with all those losses, but I still close at positive 1.4%. This shows that when you are risking less to gain high and you keep your risk consistent, you are still going to be profitable. In the month of June, this was the lowest month. In the month of June, this was a also good month of around 13.5. That is a very good month. If you compare with this month, some month you can relate that some month will give you low return and someone will actually give you a high return. Like this one is a 13.5% return. In the month of June, I also got 8.6. In the month of August, the return was the same 8.6. In the month of September, I got a 3% return. In the month of September, the market was not behaving good and the market was not giving me the setups. You can see that I took only two trades. In the month of October, I get like a 3.4%, which was also good. That is a good month. The month of November, there was a 6.8 return. You can see the fluctuation in the return. In the month of December, I got like 8.6% return, and here is the return of a curve that I took in a single year. You can see that the market was doing good. I did good, and there were ups days and there was those low days, then there's up days. This is how the curve should look like. There was an up day, then there's those deep days, then it actually goes up again, then there's another lows, then up. This shows that the curve is healthy. This is a healthy curve, and I will, if you have a curve like this, it is a good strategy. Continue using it. Just modify where need modification. When we are now going to an overall return, when I took a return of the whole setup, this is the month of January, February, March, April, May, June, July, August, September, October, November, December. The total was 86.8% gain in a single year. And here is a chart that shows how the market, you can identify that the June was the good month of 13.5%. Then the May was the lowest month with 1.4%. Actually, the setup is good, the strategy is good. This is now the data. For you to have this, for you to develop this, you have to backtest. And now I'm going to show you the same thing. I'm not hiding anything. I'm going to show you the way you are supposed to backtest. Backtest is very important. Don't miss the point. Let's go and backtest. We start at a daily time frame. In a daily time frame, we don't want to take so much information. Just want to see where the market is trending to and the momentum. The market was trending up and was making higher high and higher low, higher high and higher low, higher high. Failed to protect this low and then break this low. When this low was broken, we now know that this one might have started a bearish move. You can also see the momentum. In the previous days, more than a week, the market has been selling bearish. That gives us some idea that the market is going to be bearish. We are going to 4-hour time frame. We already have an idea of what might happen in 4 hours. At this point, you can see that the market was trending downwards. We were making a higher low to this lower low, making this higher low to this lower low. When this higher low was taken out at this point, we are now seeing that we are in a bullish move. We are identifying the trend in 4 hours. That is our main goal at this point. This was a higher high, made this higher low. After making this higher low, failed to break this low, meaning this low was protected. Now and make a higher high. Now we can clearly identify that the higher low in 4 hours is this point, and then higher high is at this point. We can see that the market is retracing. There is a probability that this market will retrace from this point up to this point, then continue and make another higher high, or it can take out this low and make another lower low. Let's move to a 1 hour. This is the bullish push that we marked in 4 hours. In this bullish push is where we want to mark our internal structure for 1 hour. This make a high, then make this a higher low. After making this higher low, continue to make this higher high. Push down and make this higher low, then form at this higher high. When market take out this low, we are in a bearish push, and when market continue and take out this high, we are in a bullish push. When market made this high, it retraces back and take out this low. When this low was taken, I now know that the market is ready to push down. The next thing we want to do, we are now going to 15 minutes and analyze this push, because we have already identified that the market is ready to push down. We want to now identify the exact points where we want to sell. In 15 minutes, we are now more focused on a bearish push, the last 1 hour bearish push that led to a lower low. We want to identify the internal structure of 15 minutes in that internal 1 hour bearish push. This was the last 15 minutes that led to this bullish push. When this low was taken out by this one, we are now counting this one as a first lower low of 15 minutes. Meaning this was a low, 15-minute lower low. It retraces back and made this lower high, then pushed to make this lower low, then this is another lower high to make this lower low. This one is a lower high to make this lower low. There is something which usually confuses people at this point. Some people will identify this one as a lower high. This one is not a lower high because of one specific reason. The reason why it is not a lower high, because it did not lead to the break of structure. When it does not lead to the break of structure, it is not a valid lower high. Push to make this lower high. That lower high led to this lower low. Then this is a lower high because it has also led to the lower low. It has taken out this low. Now in the 15-minute time frame, this is the time frame where we want to execute. And before we execute, there are some things that we need to see for us to take that trend. But trend itself is useless. We have to combine it with other things so that it makes sense. One of them, the price must hit a valid POI. There must be a confirmation. Then it must align with the trend, the 15-minute trend. In this case, the 15-minute trend is also bearish. Now we are going to look at the valid POI, then find our confirmation. One of them is a point of interest. A market must hit a point of interest. The retracement must hit a point of interest. Then that point of interest must be a valid point of interest. In this situation now, we can see that this was the last low, higher low, that made this lower low. So the 50% retracement is about this point here and this point. Now we want to see the retracement for the POI for those ones that are above 50%. Another thing to qualify a POI is that the POI must have led to a break of structure. Like in this case, this structure, which this is the higher low that made this lower low, this is the POI that led to the break of structure here. Now we are going to say that this POI is valid if it is at a premium zone. When we mark it, there is another POI that remains. In the last video that I made, I told you that we mark at most two POIs. We have a decisional POI and we also have an extreme POI. Now in this case, this one here that we have marked is a decisional POI. An extreme POI is this POI here. So we mark our two POIs. So we have to be patient and wait for the market to retrace to the our POIs. Here is a decisional POI. Market must retrace to the decisional POI. Give us a confirmation at the right time for us to take the trade and then move. If it hasn't give a confirmation, it will move to the extreme POI, give us confirmation and make a lower low. Let's play the candle and see what happens. So far there is no trade up to that point. We want to be patient enough we wait for the price to hit our POIs. The market is just consolidating. And there's something also I want to tell you. When this was the low, it retraces back, then take out this low and made another lower low. This is not a main break of structure because when you look at this trend, we have an internal break of structure. This one here, an internal break of structure. This is just a continuation of that internal break of structure. This point, yes, it is valid, but it is not where my A plus setup come from. By the way, if you want me to make a full video showing how to read the market structure step by step, showing you where there's traps, where there is a POI that is valid for the trade, and how to identify those valid POIs, let me know in the comment section. We are now seeing the market is approaching our POI. We want to be patient And remember, we are trading with time. We don't take we don't take any trade that appear after 6 p.m. Eastern time. The trade has hit our POI, but what is the time? It is at night. At that time, I don't take trade. That is an invalidation. So we just skip to the next day. My trading time usually starts at around 5:30. We are almost hitting the POI. We don't want to take a trade that is not aligning with the setup. There is something like a confirmation there, but it has not hit a POI. So that is an invalidation that I'm not taking that trade. I'm waiting for the price to hit a POI first before I get a confirmation. There we are. This is a very good trade. This is my A plus setup. This is my A plus setup. When a market has hit a POI, then that one of the checkbox has already been taken. And if you look at the retracement, if you use a Fibonacci retracement, this is more than 50%, meaning the retracement is good. We have already hit a POI and a confirmation has already also appeared. That is what I want to show you. But remember, even if a market has hit a POI, but there is no confirmation, that trade is no longer valid. Something that we wait for first is for market to hit a POI, then we are getting in the trade with a confirmation. If we get a confirmation before the market hit a POI, then we will say that that trade is invalid. We have taken an invalid trade. We should not take any trade before the market hit a POI. In this case, we can see that the market has already hit a POI, which is that good. The checkbox has already been ticked. Then we are going to the next checkbox, which is a confirmation. I do enter using two types of confirmation. For those who watched the previous video I made, I use two confirmation. One is a break of structure confirmation and another one is BBC confirmation. A bearish continuation confirmation looks like this. When market comes down and made a high, what bearish continuation confirmation looks like. Market was going bullish and we had a small retracement like this one, then go up, fail to break this high, then push down and break this low. After hitting our POI, then we say that is a bearish continuation confirmation and we want to enter a trade at this point, which looks like there was a consolidation before the final push. So we want to enter a trade at this point. For clear chart, let me take out this one here, where we place our entry, where we place our stop loss, and where we place our take profit is very essential. So I've told you that I've already tell you that just how I've said we are entering at this at the consolidation before the final push. Some people usually call it at neckline. It's also not bad. Some people usually refer to it as a neckline. We enter at that point. Then we want to put our stop loss below the previous low. At this point, up to that point, that is a 14 pip stop loss. My stop loss is usually, you want me also to make a video showing the invalidations, my greatest invalidations that save me from a lot of losses. Also, leave a comment down below and I'll make that video. My target is usually 3%. I do target at least 3%, but in a setup that is looking good, I can target more than 3%, maybe 5 or 6%. But in this video, to keep it simple, I'm going to target 3%. But this is a very good setup because market has hit extreme POI. It is very possible for the market to make a lower low. So in this case, you can target lower low. But to keep this video simple, I'm going to target only 3%. Our order is ready. Let's play the candle. We are already in and it's working well. We are at a break even. Let's break even and be patient. It's going well. We should not close in. At that point the price has jumped, but we have hit our TP and we are in the next day. We want to follow the same simple steps that we followed when we were taking the previous trade. Which one of them is a POI? After POI, the POI to be valid, it has to be qualified by the depth of retracement, meaning the retracement must be more than 50%. That the same POI must have led to a break of structure. And as you can see, this one here can be only a POI if it has led to the break of structure. This was a law. It did not break this law. Therefore, the POI is not valid. This POI is not valid. But this POI is valid because it broke the structure, and this is the high and this is the low. Meaning this POI is the valid POI that we want to take trade from. Let's play the candle and see how it works. It is working good. It's making low. When market made this low, higher low to this lower low, if we get a confirmation, we can now trade from this POI because it has led to a break of structure, and the retracement of this one here was also more than 50%. Let's mark the supply and see. It has already hit a POI. At what time? At around 17. We want to get I want us to get a confirmation before we take a trade. This is a confirmation, but confirmation appeared late at 1800 Eastern time. At that time, I'm not taking the trade. We are waiting for the next day. It is already a valid time to trade. We reanalyze again. This was a lower low, and this was a higher low. It made this lower low, then this higher low. This higher low to form a lower low. We want to see this one here being respected, or this one of them being respected and making a lower low. At this point, we are already at a valid POI, this POI and this POI. The market is not looking good, so we are still observing. At this point, the market was looking good. The setup was fully formed because this is a POI. Then the market made a low, then high, and came back and closed below this, the closer of this candle. I was supposed to enter at this point, but I'm going to enter a bit late because the candle has already closed. So I'll enter at that point. put my stop loss above the previous low. Then I'm going to target 3R. Break even level. I do break even just the same way we did in that one. After the previous low has been taken out, we break even. Let the trade run now. I'm still not at a break even. Okay, it went so fast. That should be a break even. At this point, we did break even because the price did not tap on our break even level, and that saved us from missing in this profitable trade because it retraces back, then it's coming. It has not yet hit our take profit. Let us see, but we are not closing. We are not closing. Is either take profit, stop loss, or break even. At this time, if it tap us out, that is a break even, but we are still in a trade. It has not yet hit our break even because whatever I'm seeing, that this was a valid point of interest, and it can still hold and take out this low. Let us see. Exactly, that is a profitable trade. It was on a Thursday and it was already late. That marks the end of our trading because I trade Monday to Thursday. On Fridays I don't trade. This was a very solid profitable week, and most of the time it is always not like this. I want to promise you that I also get losses, and I even shared with you some losses, and this one was a very good week, 100% win rate. That is so good. That only happens because I'm able to backtest, understand my data, and refine. I'm still developing. I'm still continuing to backtest, and I'm still refining. According to the backtest we have just done now, we have taken only 2 trades in 1 week, and this is what I want to show you, that in a week, even one single trade can change your life. Sometimes I go the whole week without trading, and this is what makes me a profitable trader. If I take trade every single day and I know that those trades are invalid, I will not be profitable. Something that I usually tell you, that what builds the profitability is eliminating the invalid setups that you are taking. If you are still taking the invalid setups that you are supposed to eliminate from your trading, then you will not be profitable. And my goal here is to help each and every person to build consistency. That is why I've gone to an extent of giving a free Telegram channel for those people who are trying to become profitable, the struggling people, so that I can help them, guide them, and become profitable traders. If that sounds like something you want to join, the free link is in the description.